Hello guys, so welcome to today's video. In today's video we'll be looking at trading sessions. So like I said, in trading we have pairs, we have certain pairs that can be traded, and amongst the different types of trading, the different currencies, the different cryptocurrencies, the commodities and indices that I said could be traded. Yeah, not just traded at any time. In a day, there are certain times when these pairs have the highest rate of movement in the market. And so this brought about this scenario where the market is traded in sessions. So in trading we have 4 basic sessions. These sessions are the Sydney session, the Tokyo session, the New York session and the London session. So during the Sydney session, the market opens by 10 p.m. UTC and closes by 7 a.m. UTC, which is around 11 p.m. Nigerian time to 8 a.m. Nigerian time. Quiet starts to the trading a day. Mostly these are pairs. These are pairs such as Australian dollar, New Zealand dollar. These trades happen mostly in Nigeria for people who want to trade throughout the night till the morning. That's when Sydney session takes place. And then we also have Tokyo session. Market opens around 12 a.m. and closes around 9 a.m. UTC. For JPY pairs, that's almost all Japanese yen pairs can be traded during this Tokyo session. So during this time you often see price consolidate. That's around 1 a.m. to 10 a.m. In Nigerian time. Then next we have London session. London session opens by 8 a.m. UTC and closes by 5 p.m. UTC, which in Nigeria time will be around 9 a.m. to 6 p.m. It is the most volatile session. It's the most volatile session. You should take note of that. And it is best for Euro GBP and major pairs. All the major pairs are traded during the London session. And all Euro and GBP pairs are most traded during this time. And then we'll go down to the New York session. It opens by 1 p.m. to 10 p.m. UTC. In Nigeria time will be around 2 p.m. to 11 p.m. You notice that the UTC has just is 1 hour earlier than our Nigerian time. So any time given to you in UTC, you just have to add 1 hour to it, and you have converted it to Nigerian time. So New York is always affected by high impact decision due to US news, and excellent for USD pairs, Euro USD, GBP USD and gold indices. Those are really traded during this time. And the most liquidity and movement happens during the London and New York session overlap. There's a time when both the London session and the New York session are running simultaneously, and since both sessions have the most movement in the market, that is a time when that time comes when both of them intersect. That is a time when most of the heavy moves in the market happen. So we need to take care of that and take note of that. The market happens in sessions. We have 4 main sessions, and these sessions determine the kind of currencies or the kind of pairs you trade at a particular time that will guarantee you the best movement. So what affects market volatility? We have economic news release, Example: NFP interest rate decision, CPI unemployment rate, news from the US, UK, and EU especially shakes the market. Check economic calendar daily before trading. Central bank decisions. Central bank decisions also affect market volatility a lot. Announcements from Federal Reserves, ECB, or BOE affect interest rates and currency value directly. Causes strong spike and new trends. Geopolitical events, things such as war, elections, policy changes, and global conflicts, they affect the market a lot, impact traders' sentiment, and create sudden volatility. They affect the market a lot. Then, what affects market volatility? Market openings, market sentiment. So at that time when the market opens initially for most of these sessions, like London sessions, that's when you see most of volatility floods in as well as during the early opening hours of the market. Price moves aggressively during those times, so market openings can also affect volatility. Then market sentiment, as fear, greed, control short-term markets behavior. That's a short-term greed and fear tends to control markets behavior. Then volatility can be an opportunity, but it's also a risk, so you have to be careful. Always know what's moving the market before you jump in. Enter in at during the right session. You want to find yourself in the right session, so you'll be able to capitalize over volatility. Then recap for today's class, we're able to discuss the 4 major trading sessions, which are the London session, Tokyo session, New York session, and the Sydney session. So when most volatility happens in the market, that's during the London and the New York overlap. While London, New York overlap is the prime time, like I said, is when most of the market moves happens. So since London and New York have most of the market moves, they are the most volatile sessions. When they interlap, you tend to see most volatility. So what drives volatility? News, central banks, market openings. We're able to discuss all this. So knowing when to trade is just as powerful as knowing when to trade. So you should take notes, know what to trade at what time, know the session you are in, know what happens during those sessions, know what is traded during those sessions. It is very, very important. So thank you for watching this video. We'll meet in the next video.